welcome to Cashflow. Today we are going to talk about financial statements and how to read a financial statement. When you go to the bank, nobody asks for your report card. They ask for your financial statement. But most people like you and me, we don't know how to read a financial statement. So today we're going to talk about this important topic with Chari. So let's get into it. So Chari, what is a financial statement and how do we read the financial statement?
Financial statements, when it comes to financial statement, there are three types of statements that we're talking about. First is income statement, or what you call it, P&L. And then we have asset and liabilities, which is in the balance sheet. And then we have another statement called cash flow statement, so which indicates how the cash flows are moving. So for example, these three statements gives you a different perspective on a particular person or a company or entity or something like that. So for example, if you say P&L, or the profit and loss statement, so that gives you how much income that you're getting, then how much expenses that you have, and then how much is the profit. And then the balance sheet, it gives you how many assets that you have, and then how many liabilities that you have, and then it's end of the day it's going to be zero, right? So that's why most people are getting confused with the balance sheet. And then the cash flow statement. What is this cash flow statement? So the cash flow statement is nothing but money in and money out, and then end of the day what is in it. So that's in roughly, or in a nutshell, what is financial statements are. So how to read a financial statement. So I'm going to take two different scenarios today and then explain how the financial statement is going to be. For the first example, let's say there's a shop and then somebody's producing an item and then he's selling. So for one particular item, it costing him let's say $5, and then he's making 100 items, and then he's selling at $10 each for cash. That is the first scenario, and then we'll see how the financial statement is going to be. And the second scenario is he's producing that same number of items, but he's selling on credit, and then we'll see how the financial statement looks like, because that's where the most confusion comes with P&L and the cash flow statements, and then people don't have any idea about the balance sheet. So let's get into the whiteboard with those two scenarios and I'll explain what it is. Right, so we are going to talk about how to read a financial statement or how to lodge entries on the financial statement, right? So these things we are going to talk about in two scenarios. First scenario is somebody got $500 and then it cost, he's manufacturing 100 items at the rate of $5 for costing one item, and then he's selling those things into cash at $10 each, one item, right? So let's see how we can lodge these numbers in the income statements, right? So for example, on the income and the expenses statement, so we can say sale, which he makes how much? $1,000. And then cost of sales is 500. So his profit is 500. Alright, okay. And then his asset column, cash on hand 1,000, and then on the other hand, on the liabilities, it says owner's equity $1,000. So balance sheet always balance, right? And then cash flow statements. So you have cost of minus 500. And then sale of plus $1,000, right? So you ended up with net cash flow of positive 500, right? So that's the first scenario, right? Let's do the second scenario. The second scenario is the same person is making same number of products, right? At the rate of $5, 100 items, and he's selling all these items on credit, right? That's a scenario. So we'll see how our number is going to change, right? So first we'll see the income statement. So you have income and you have expenses, right? So what is my income? It's a sale, which is $1,000. And what is my cost? 500. What is my profit? $500. Right? Okay. Right. And then we get into the asset and liabilities. Right? So on the asset side, instead of cash on hand, now we have something called debtors, which is $1,000. Right? And then we have owner's equity, $1,000. Okay? And then we go back to the cash flow statement. So, first instance, cost. You cost 500, right? But on the sale, did you make any money? Actual cash? No. So, 0. So, net result is minus 500. So, the problem is, on the very first instance, you can run the business because you have left with positive 500. Now, this scenario, even though your company is profit, tomorrow you can't run the business because you don't have any money. So that is the most important thing, that when you analyze all these things, so 3 pictures that we are getting from these 3 statements is important. And then when you analyze it, only that you can read these statements, that you can get an idea about how the business are doing well or how the person are doing well, right? So I always look at the cash flow, whether it's a positive cash flow or a negative cash flow. So that's how you can analyze the business.